This conference will now be recorded.
Hi everyone, it's the Damas Principal and Patrick Reed. Slightly later on the transmission tonight, we've got an EM special, so apologies. Beat and I have been trying to fumble around with our technical aspects, but we're gonna Beat's on his Beat's got about 20 computers because that's how big he is as a
Yeah,
trader.
sure.
So he's on one of them and I'm on my only computer, which seems to be holding together just about. But it doesn't matter because we've got a great show for you today. It's an absolute cracking show. Some things have been happening in the EM space, and Beat, your first of all, welcome tonight. Say everyone to Beat in the house.
After all the hassle of my new computer, my super personally built machine that seems not to work yet, but we get there tomorrow.
We'll get there, mate. We'll get there.
Call the computer shop and tell him to come in.
Well, it's great to have you on because we've got an EM special. Something happened, right? And I got into EM through your good self, purely not as a trader because I don't really put my skin in that kind of space. But certainly what you taught me is to look at EM and how that affects G10, and looking at the idea of the type of EM trader and how how much knowledge and how good you've got to be on the macro, right? But something happened, and it was Turkish lira, and I just wanted to sort of go over. I think before we start with the Turkish lira and the first topic, I just want to. Can you just give our viewers a bit of a rundown on your experience of EM and how you've kind of navigated it? You've sat in some really big seats in your career so far, and just some top line stuff of your experience of this space.
Yeah. To be honest, I mean, I came to EM actually by accident in 1997. I joined Morgan Stanley. I was always a G10 guy, and then there was this so-called blow up, and they figured out that because I was sitting through the 1992 EMS crisis, that it's an FX crisis is an FX crisis. They're all the same. They sort of currencies blow up, interest rates blow up. People getting hurt left, right, and center. So the hallmarks are the same. In terms of, I had to learn the ropes very quickly. The only thing I knew when I started trading the Asian crisis was that things always move a lot further than people think. That was the only thing I knew, because that's what happened with the Italian lira in 1992. So when the stuff started to blow out and people started to think, it's going to quickly move and then it's going to settle, I knew it's not going to settle, because that's not how a blow up works. The most important thing people have to understand is, especially in EM, those are countries that hate speculators, most of them. So that means, if you have positions and you fool around in these markets, when the pressure builds, the central banks start to lose, the countries start to lose, they tend to react rather angrily and try to penalize speculators. So that's really, the reason I say that bluntly, because that's what it is. So everyone who's listening, who's a speculator, thinking to fool around in Turkish lira, be aware, someone's going to come out and try to get you. Now, we blogged around last week about, how to avoid to be caught. Is really, you cannot run positions in EM the way you run them in G10. So that means there's not you either day trade and you close your risk end of day, meaning you don't have to do an overnight swap, next swap, and so on and so forth. Or if you plan to hold your risk, you have to swap the position out to 3. I would usually say 6 months the least, because the front end still not too safe. If things don't calm down early enough, this sort of 1 week funding is not really the space you want to be. The pressure builds on both sides. The pressure builds on the FX and pressure builds on interest rates. So the only way for Asia, for emerging market central banks to try and protect the currency or what's going on is by jerking up short-term rates. Obviously, if you long dollars, short Turkey in this case, and you're not funded, and like what happened last week where the overnight rate went to 1,400%, that's roughly probably about, I would say, I didn't calculate, but I would say it's probably around 13, 14 big figures in dollar Turkey that you're going to lose in one night, right? So for everyone who sort of, did wake up to that case where in the morning you lost maybe 7 or 8 big figures, in the afternoon you lost probably about 12 or 13, that's very painful. And then step 2 is, when the pressure builds, the outflows happen, the market goes nuts, then the central bank will try through interest rates, they will try interventions, this and that, but at the end of the day, the end game, if you could just go fast forward, because it's probably 1 hour won't be enough to get into all the details of emerging markets. The end game is capital controls. Capital controls means that you're not going to move your money anymore, which means what happened in Malaysia in 1998. Malaysia dollar ringgit traded at 425 one weekend, I think a Monday or Tuesday. The central bank decided back and capital controls. The pack was at 385, so you're long at 425, you wake up at 385 because the central bank tells you that it is there, and then it was just frozen. So there was no trading possible anymore. It was onshore Malaysia. It took us, can't remember, I think it took us 3 or 4 months to build an NDF market. Banks did all get together in the city to try and swap out how the book looked, try to take care of the forward risk that every bank had, netting out the exposure. And at some point after 3 or 4 months, we got an NDF market. People could take care of their curve risk and so on and so forth. But what happens for you in the first place is if you have a position, so we're suddenly not talking about you losing a few percent in terms of P&L. You suddenly talk about your nominal amount that you have as a position is at risk. It just sits there doing nothing, right? And as I said, these central banks don't really like speculators a lot, so they will just try to hurt you as much as they can. That's why I was blogging about this week to suggest to retail, go away, stay outside or stay out of dollar Turkey. Yes, I know it's attractive if something is volatile, but one thing you always have to know when you play EM is, yes, you can play the pressure. Yes, you can turn the heat on, but only if you know how to play it. So for example, I was never funded below 12 months. 12 months, because when the pressure builds, even if spot is selling off, which is something we will talk about in the session, when short-term rates are at 1,000%, the only choice a trader has to get funding, well, first of all, he's screwed on the overnight already, we know that. But then step 2 is, because you can't fund your position anymore, you have to square up. You actually have to buy your Turkish back, sell the dollar, you're out of the trade. That's really what the aim is of this game, right? So if you jerk up short-term rates to 1,000%, close the door for people being able to fund or to roll their position, you have no other choice than to close the position. That's really the kind of aim of the game. And then you don't come back in, obviously, because then the whole rate curve is moving out. That's why when you're on the 12 months, usually what happens, even if spot sells off, the long end goes up. So in theory, let's say, just as an argument, let's say dollar Turkey would sell off 3% because of the short-term rates. You can be sure that your outright 12 months has not moved. The long end goes up for about the same as spot goes down, because everyone knows the spot move down is only a short-term phenomenon. That's only a phenomenon when the market has to square up its position. Now, in the case of Turkey this week, what was very interesting to see is that spot didn't sell off.
Yeah.
Spot not selling off tells me one thing. There's not that much speculators out there in the spot. or in the front end, right? Because otherwise we would have seen a sharp move down in dollar Turkey, which we didn't see. So that means it's either like the Watanabes, which was a lot written about Japanese retail, that the positions are still quite sizable out there. They obviously, because they play carry, by default, they're funded, at least. You know, they're on the other side, right? So they're long Turkey. So that's basically really what, you know, Mr. Erdogan will wish to be. So they're on the other side. At this point, you know, there's not, you know, that much danger to their position right now. They're long Turkey, which is always a good thing if in a FX crisis, at least from an interest rate point of view. But what you then have, at some point, the market is losing total confidence in a system, which we have, you know, in the case of Turkey, I think we lost the confidence quite a while ago in terms of the you know, what's been going on with the loss of the independence from the central bank. So, you know, I could list a long list of Turkish problems. The market has been ignoring it for a long time. But I think we got to the point. So if things happen that happened last week, this is big alarm bells. The moment things are breaking down is when you really start to understand the true problems. Now, personally, and I have spoken to a few friends that work in the real money area, which talk to me about Turkish, I just had to say one thing to them. You know, I said, yes, I get it. You have a lot of carry, and as long as the currency doesn't sell off those 24% what you get, it's okay. But the other question you have to wonder is Turkey investable in that sense? You know, is Turkey still a country that you can really invest? And I think from a real money perspective, yeah, maybe some high yield guys that take punchy risk, you know, fine. But Turkey, in personal view, is it's not investable right now. It's too risky. We don't know where this is going. Actually, as we speak, we're going to get some results later on from Ankara and Istanbul from the election to see how good old Mr. Erdogan is doing. But coming back to the actual market, so reality is the trust is lost. And Turkey has another problem. Turkey, I think I spoke on the investing channel about it. They have a big credit bubble, right? Then what you have as well, and that's probably what Mr. Erdogan doesn't really want to see, is I think domestic people in Turkey are long around $180 billion worth of foreign currency, right? So the problem is not so much a speculative market. The problem is once the trust is lost abroad as well as at home, people start to harbor or try to get their hands on hard currency. So that means the actual speculators, if you want, are actually more domestic than it is international. So whatever they are doing with interest rates, yes, they could stabilize Turkey for a while with 24% interest, but they have far bigger problems. And the difference between the Asia crisis and Turkey in this case is the Asia crisis, we had packed currency, similar to 1992 in EMS. You had wrong levels, you know, economies have moved on, packs have stayed. So yes, the same happened. Currencies have been mispriced, and that's what the kind of, you know, one of the problems that the Asia crisis had. What many of them didn't have, maybe except for Indonesia, is the sort of political dynamite that Turkey has, where we have true, you know, trust issue to politics. So we not only have an economic problem, we have a political problem as well. And that's why, you know, if you talk about recovery, it's a little bit tougher to see, because reality is, as long as the situation in Turkey is what it is, as long as Mr. Erdogan thinks he's a central banker, and the longer, you know, we think that he's doing things that are closer to be a dictator than he's, you know, a president, I think it's very hard to see a recovery. Now, in a sense, we can say, yes, Turkey is an isolated problem. We had a little bit of a little contagion in the rand in the last few days. Some of the other EMs looked a bit soft. We do not yet, because everyone knows Turkey can, you know, is somewhat an isolated problem. It is until it isn't. That's all I would say. I'm not saying that all the emerging markets are going to collapse. I just say, there's never smoke without fire. What Turkey just showed again is once the bubble gets too big, and I'm sure in other emerging markets after 10 years of cheap money from the US, we're going to have some horrible balance sheets out there without a shadow of a doubt. And I think what the problem with the Turkey situation is, it kind of highlights or reminds people what the credit cycles are, what the cycles are when the Fed start to hike rates. Usually a lot of that would a lot of skeletons in the cupboards when the spot dollars suddenly start to move. And as I said, maybe it calms down, maybe it's isolated, but these things just don't happen without a reason. And, maybe to finish it off, I just say yet again to retail, this is not a market for you right now. It is not, because you need to be very educated about what you have to do in order not to suddenly lose silly money. I'm absolutely sure that there'll be a lot of people out there who paid the price this week, suddenly seeing the rolls they got and didn't understand what happened. And yes, I get it. Volatility attracts players, speculators. Sometimes, when we put too much pressure on a currency in EM, like we said, the central bank is fighting back or the government is going to fight back. And your end game is always, your risk is always your capital. It's not your P&L, because at some point you can't manage your P&L anymore because you're not allowed to touch the currency, right? Because of capital control. So to be honest, personally, I just think, those who want to play it should really seek help from people like yourself or myself to really know how to play this. If you don't know how to play this, do me a favor and just leave it alone, because it's too dangerous, it's too risky, and some horrible things have happened, in every crisis, right? 1992, 1998, I've seen people lose their shirts, in a big way, and mainly due to not being educated, right? And it's a very high price to pay.
Well, that's fantastic, Beat. I just have to say your screen is frozen. I can still hear you
as well.
So if you just hopefully, I don't know if you can tweak it and then come back on. I'll stay online. I've actually, while you're coming back on, I put up a rather bad boy chart here. So this is try yen. This is Turkish lira yen. Have a look at that. So, that says it all. Yeah. Just be really careful trading Turkish lira. And here's our old friend dollar try. Okay. So obviously, from what Beat was just saying, just be super, super careful. On a personal note, I've been doing this 10 years. And I've only just recently got into understanding the complex space that is EM. I only really use, I only trade small amounts, small clips on EM. I only really use EM for G10 because it's invaluable, and it's certainly something, Beat, you've taught me. And I just feel that it's, from my brief kind of understanding, it's incredibly complex. There's a lot of stuff you need to really bear in mind. Dodgy governments. I'm not saying Turkish government is dodgy by any means or stretch of the imagination at all. But dodgy governments, big spreads, violent moves, aggressive, angry intervention from central banks, and animal spirits as well, because when there's a risk on or risk off move, it is absolutely brutal. And forget your yen pairs. The real risk on and risk off is in EM space, because obviously people will be. Sorry, I'm just going back on. People will be. Hi, Beat, are you back? Hi, mate. Yeah, great. So,
I
I was just saying,
I
my
heard you along. I did hear you. I just not
cool.
visit.
Okay, I wasn't saying any bad words about you. Don't worry. Yeah, so you've got all that to contend with it with the EM space, but it's an amazing complex space, and just I put on the Turkish lira yen chart, and I'll put it up again for you if in case you missed it. Where is it? Here we go. Have a look at that, mate. Does that say something to you? Is that volatile enough?
Well, to be honest, I'm sorry to say, but something doesn't look right on this one.
Oh, really?
No. I'm just trying to get mine in quickly. It is. What's this? A daily chart?
Yeah, it's daily.
Yeah, no, something doesn't feel right on this one.
Okay.
But if you have TraderMate, I may have the same problem. I just quickly check mine.
Okay.
Because something feels off. It did move a lot, but it didn't move that much.
Okay. All right. Well, that's this is this is dollar try anyway. That looks probably a bit better actually.
Yeah,
but,
that one. Yeah.
Yeah. So I mean,
that spike up to green flat one was Friday week ago. That was about a 5% move.
Yeah.
Yeah. So then now that one is proper. Just trying to quickly see if I get mine on here. It's always when you have to work, as you said, when you work with about 700 systems.
I know. But look, the point here is it's not for the inexperienced, it's not for the unfunded, it's just for someone who's got, you need deep pockets, you need to understand the complex things about EM, but just be careful, watch that risk. It's a very, very tough market. I mean, the thing about, say, Turkish lira is because it's around 24%, you're always going to get carry traders, and in my view, carry traders love things that don't necessarily move like the Turkish lira, but when they do, once in a while, that can be devastating, right? But if you're long try, you just want it to, a lot of carry. You just want to get your carry all the time, and you don't really mind as long as it kind of stays in the range. You'll take that as long as you're getting your nice carry, which is around 24%. So, yeah, so that's Beat. Thank you so much for that. That's a great intro.
I have to obviously be using the same chart, so I'm gonna call them tomorrow morning.
Okay.
It's a misprint, so it's definitely I have to correct that.
All right, thanks for that. Okay, so the first thing we've kind of covered the first topic in the bullet point, Turkey on the brink, but what actually happened with carry and the overnight swaps in real basic terms? Obviously, there was for me on Friday the 22nd, dollar try went up from 5.46 to around 5.8. This, I think, was part of the broad risk off day, which was on the Friday, and then on the subsequent Monday and Tuesday, it kind of stabilized, and then on the Wednesday and Friday, it rallied again. Overnight swaps, I think that was on the Thursday, wasn't it, or was it the Wednesday night?
Yeah, I think so. Yeah.
They went to 1400. Was it 1400% up?
I think the highest I saw was around 1400. Yeah.
Yeah, and this was basically
6, 7 in the morning, and then it just kept going. And I think at some point there was even no right-hand side anymore, so it could be anywhere.
Yeah. So this was basically, for those who don't know, this was an attempt from the central bank to stop selling of Turkish lira and attract buying, and obviously squeeze out some positions that they'd have to get long Turkish lira as well. So by doing all of this, that's the short-term fix. Obviously, there are elections this weekend. I'm not saying that's a deliberate thing. It could have been a coincidence, but that's just a fact. The only other thing I'll mention is about a third of the reserves were spent. I got that from the FT via someone else, I forget, but that's just interesting how long this can, remain. If dollar TRY keeps rallying hard, how long can this remain? So, that's just an interesting thing. What do you reckon, Beat?
To be honest, there's always two sides to the equation. So the problem a emerging market central bank has when the pressure builds is if it's just speculator, then that is, I think I gone stall again there. If it's just speculators, that's let's say easier to manage, because the reality is they all need to fund themselves at some point. The problem I think the Turks have is the fact that it's domestic that is actually selling Turkey. Like what I said earlier, no central bank has enough reserves if the domestic market loses its confidence and gets their hand on hard currency. So I remember after the 97-98 crisis, I think 2 years later, I met some key people from the HKMA on a lunch, and off the record, I asked them, how close did you get to let the peg go? And they basically more or less said, listen, if the flows, if the selling of Hong Kong dollar would have been driven by domestics, as in domestic guys, shifting the money abroad, they would not have spent all their reserves and would probably have stepped aside. But because it was more offshore speculators trying to push the HKMA into letting the peg go, they could easily defend that. There's a bit the same here. So if I see, I think I can't remember what I read, whether it's the highest amount of foreign currencies Turks own since, whether it's 2013 or 2003. Don't hold me to that. One of the two, can't remember what it was. So that means if Turks start to actually, either buy hard currency or even shift the money abroad, that outflow, no central bank can survive. And definitely not a central bank that is down to $23 billion. If it's pushed back, like we said earlier, they have a lot of let's say, means to defend, right? Worst case, they do something with as far as capital control, to the point where foreigners are no longer allowed to actually play. So, let's wait for the result from the elections. I see my camera doesn't do much better.
I know you were good then.
Yeah, was I? I was slow on my side.
That's good.
Now it's normal again. Jesus Christ. No, so reality is, let's wait for the election to be over. Let's see. There is one glimmer of hope, right? So I don't want to be too negative all session. If Erdogan were to lose some of the big cities like Istanbul or Ankara, there could be a little bit of hope coming back to, that maybe all is not lost. And so there's a bit of two-edged sword here for next week in terms of the political outlook. So if Erdogan would have heavy losses in some areas, maybe, he starts to realize that certain things have to change. So there's a little bit of hope. But in the short term, I just think, desperate central banks do desperate things. And sometimes they don't think it to the end. And, long term, maybe everything comes good. In the short term, they could continue to damage the market even a little bit more. So, as I said before, for retailers, no other choice than just forget it. There's no market for you. Just play something else.
Yeah, good stuff, mate. And I guess the question here is why didn't spot collapse? Was it effective? Was the overnight swaps effective, or what's your take on that? Because obviously, this is just interest rates, and spot had a bit of a move, but it didn't really.
Yeah, to be honest, my gut feel was that whoever orchestrated this move on the swaps shot himself in both foot or in both feet, because reality is what you wanted to see is a sharp move lower in spot. The fact that we didn't get it just tells me that, there's not as much speculative positions out there than they did assume, or locals just were the other side, just eating it all up. So every emerging market cross I've seen, when at the first step you do see a sell-off in spot. You usually do. We even saw it in dollar Hong Kong, which is a semi-pegged currency. So usually the first reaction should be everyone who is called has to square up spot. Now, I was surprised that we didn't see. I expected dollar Turkey to have a rather sharp move lower, at least on the day. And given that we didn't see that, would tell me either everyone is rolled, not that many specs cash involved. So I'm a bit, I was a bit confused. I really have expected more. And so whoever, the problem, whether it was deliberate to let the overnight go or it was not deliberate, we don't know. If it was deliberate, it backfired. Because all you did is you showed your market is no longer able to cope. You showed, things have gone rather to the sort of silly street. And, that's the last thing. If you're a country that has already problems, the last thing you need is to actually put your hand up and say, hey, look here, there's a problem, right? Which you actually do if you let overnight rates go to 1,400%. So I don't know. It puzzled me. It really did. I really don't know why the spot didn't sell off. But the only thing it has to mean is either the market wasn't short, or as short as they did think it is, or short Turkey, or everyone on the other side just scooped it up.
Yeah.
Knowing that it's going to get a little bit dicey.
Yeah.
But only time will tell, to be honest.
Okay. So I guess this is more where I'm interested in that, as I look at EM for G10, right? That's something I'm really into. It's thanks to your good self. The next step here, I said, we've had the blowout of the overnight swaps. Spot didn't collapse on try. It seems to have calmed down a bit. Let's see what happens to the elections. Now, are there wider risk-off indications so far with ZAR, MEX, Ruble, and Krakow KRW, sorry. And will the elections upset the bondholders? Because there are some bondholders in Europe of Turkish bonds, I believe.
Yeah.
I don't know how much, but I guess contagion's been self-contained. It hasn't really happened, but that could all change, obviously. What's your in EM in a wider space? What are you seeing right now?
Well, to be honest, I mean, we talked about it the last sort of 2 months, that every time G10 had like what looked like risk on.
That's right.
EM didn't really follow, and that was the main reason I kind of kept my bearish risk view. I'm still amazed about the whole game between equities, bonds, and emerging markets. So we have like crazy volatility in the bond market. That really is another sign of stress. Again, my opinion about inverted yield curves. I think the bond market just panicked. Let's be honest. The bond market panicked because they don't have a Fed that does forward.
Sorry, my laptop's about to run out of juice. You carry on. I'll be back in a second.
Yeah. So reality is what we see is a Federal Reserve that stopped doing too much forward guidance, and many people that are in the market are just not used to have no forward guidance at this point. And I think the market just suddenly, fell over and panicked. So I think the extremes in the bond market, they may probably be wrong. I still think the move itself is correct, because what we have is we have a global slowdown, we have a weakness across the globe. So bond prices to go up makes sense. The intensity we seen last week doesn't make sense, but what it still shows is a market in distress. To have equities that just do nothing is just extraordinary. So at some point, central banks can contain or control certain elements of the market, but at some point, it's got to go. And I see emerging markets at the moment more in context with the channel risk. We had a bit better PMIs in China, which probably, help risk, as I see on the open, helps risk a little bit. But you can't just completely ignore that actually the overall risk out there is weak. If you look at Europe, if you look at Germany, if you look at, whatever happens in Britain, we don't even know yet. And eventually, I think the data will probably not stop on the front door from the US. So we have durable goods retail sales next week. That's going to be very interesting to see. So I in the context of everything, yes, again, if the Fed risk is less, emerging markets tend to usually like it. But we didn't even see that, right? Dollar emerging markets, even after the Fed, we had 2 hours of dollar sell-off, and that was it. So the emerging markets didn't even react to what we call, whether we want to call it a pausing Fed or a dovish Fed or whatever we want to call it. Dollar emerging market should have been the leader in the move down in the dollar, without a shadow of a doubt. It should even have continued when G10 stopped, because the biggest worry for dollar emerging market is a Fed that is hiking rates. So the fact that dollar emerging market has not sold off to the tune that I would expect it to sell off, with kind of, Fed that says, oh, maybe we've done enough, or with a Fed or with a market that even starts to think about rate cuts late in 2019, for dollar EM to continue to go higher, that shows a fundamental problem where there's worry. So we have worries in the bond market. We have worries in my eyes, in the emerging market space. We have a dull/boring G10 market, and we have non-moving equity markets. So, look at gold. What happened to gold on Friday? It absolutely nuked, which again is a very strong reaction for just a bit of a bit dollar. I don't think equity markets done enough to suddenly be like everyone be happy. We have a, let's say, correlation breakdown, which is usually the early sign of something bigger to come. Now, as a risk bear, I say it's equities rolling over, but maybe I'm wrong, I don't know. But the signs out there, the individual signs for the individual asset classes, cry out like, a big yellow flag, and or short of a red flag. And everything to go back to normal now. Yes, yields probably have gone a bit too low. But as I said, the underlying move is correct, right? Yeah. It probably was the easiest 2019 move so far, while we try to have a view in FX. The only ever trade that was probably the no-brainer from early 2019, when the data in Europe started to roll over as well, was that bonds are going to go up.
Yeah.
Right? And I'm still feel that this time, lower yield is not bullish equities. I mean, if people, whether you believe in a Powell put or a Fed put, whatever, the Fed is not going to jerk up stock markets with the S&P at 2,800. I mean, it's just not going to happen. And I was reading some more cynical reports over the weekend where, I think the Fed would have been happy that would be quite a bit lower, not in a, aggressive collapsing way. But I think the Fed will feel better that Dow being 20,000 than 26,000, because the longer this bubble lasts, should we really get a weakness in the US economy, I don't think the rate cut from the Fed, should it happen towards year end or early next year, 25 pips cut, it's not gonna make the Dow crazy at 26,000. But this is still the hope and dream that equity guys have. Oh, Fed cuts are around the corner. That's gonna get the next monster rally. Well, I think the level is already quite dicey, in my opinion, for this not to happen. So, but all we can do is what we do every week: is we have our views, we sell a bit of risk rallies, we take some stuff back until the day it really rolls over. When will it roll over? I have no clue. There's this, fresh hopes between the US and China. We seem to ignore a lot of bad news, and the market is clinging on to one or two good news, which I think is dangerous. It just continues to lead to imbalances. And I think the equity market, if I look at the Dow chart, I just cannot believe where it trades versus, if you would have told me all the stuff that happened in Q1, I would have made you a different Dow price than where it is, that's for sure.
I like your Dow chart, mate, because it's looking like it's getting toppy to me. If it breaks that trend line,
it's a triangle, right?
Yeah, it's just looking like it could. It's in the early stages of topping.
Yes. Yeah. No, definitely.
On that, there's some stuff you were talking about there. You've frozen again, but you've got a nice portrait, so you can either reset or I'll just carry on. But so there is a huge disconnect, as you said, with equities and US yields, especially the S&P and 10-year. I think the bond move we had on the Friday after the Fed on the Wednesday really highlighted. I think there's a bit of a shift here, and I think global bond yields are just really low. Bunds like negative, obviously, and then you had that 3-month 10-year inversion. It's a red herring. I just think it's just one of those things. Not long ago, everyone was talking about 2-year, 10-year. Before that, it was LIBOR, OIS spreads. So I just think the wires have got to have another kind of crisis hat to put on a peg, and I just think that just calm down. What actually happened? What happened is people were buying bonds. That's it. Probably uncertain. It doesn't mean we're going to hit recession. We're buying 10-year, they're buying T-note, and they were buying 30-year. So that's it. Just take it at face value for now. But yeah, so I just feel the equity market is being propped up by buybacks, and I think April's going to be very, very interesting. To see, there's some desk talk about an embargo or a reduction in these buybacks. So that alone may not cause equities to roll off, but it could be that along with other stuff. One thing I will say is certainly when I've been trading, I'll just carry on talking until you come back, mate.
Yeah, to be honest, I hear you.
Oh, here you are.
No, yeah, I've been here all the time. It's
just
my picture that keeps popping up.
Okay, cool. So I think the key thing for me, is this: we're in a market that doesn't know what it wants in both dollar terms and risk terms. So the key thing is, look for reversals. I'm going to put the dollar index up, and just this is what I've been doing. I changed my strategy a couple of weeks ago, and I'm, after the FOMC, that was the best cheap dollar to buy. I think we both faded it, right? And look at the follow through from Friday's risk off. No follow through. Yeah, that was a risk fade. the FOMC was a dollar fade, you know, and so all I'm saying is that this is a market that doesn't know what it wants, and it still hasn't sunk its teeth into something.
I
So
agree.
just take your profit quicker. That's what everyone else is doing, and that's what I'm doing. So just be kind of, just be wary of having, like you'll get a risk off Friday with a miss on German PMIs. Don't assume it's just going to be like that, because the market is quick to take that profit, and we should be exactly the same as the market because we are in the market. And that's all I'll say on that. But I just think there are some people, and certainly, I know I go on a little bit about rates and stuff, but one of the reasons perhaps that after the dovish Fed, EM dollar didn't really get hit, was because it had been priced in OIS way before the dots got into line, and ED futures were actually cutting. So that's why we faded any strength in Eurodollar on the Wednesday, and that's why EM dollar didn't get properly hit after a dovish Fed, after the new dot projection. So that to me kind of makes sense. But also running in line with what I just said before, it's people just don't have any conviction. The market, as in, just oh look, I'm not convinced on something, and that's in dollar terms and in risk terms. So I don't know if you've got anything else to add on that one, Beat.
No, to be honest, that's what you said is exactly how I traded. I faded the dollar in Fed night. Once the euro came down, I lost interest. I'm short, euro yen. So my euro short is now euro yen rather than euro dollar. I'm short Canada yen, Aussie yen. Just a risk pair, selling rallies, taking stuff back in the dip, keeping a small core short at all times, just in case it would roll over. But what I totally agree is you see how fickle G10 is, or you see how fickle all FX is, and just nothing sticks. Nothing sticks because people just simply don't know. They see the risks, but they see this one or two good things that could still happen. No one wants to be short too early or caught long. So I think it just seems to continue for now until we get Brexit out of the way. Hopefully next week we know what really the scoop is, whether we get general election, long delay of Brexit, or whatever we get. So we have still two big topics that, even though I personally think the China-US thing is overstated,
Yeah,
it doesn't help if the market wants to cling on to it. It will. So it's not good enough for me to think it's wrong. If the market is not selling off because they don't want to be caught short when this big trade deal is going to happen, maybe it's really this that just keeps us, so contained that no one wants to make the first step. But one thing I truly believe is, and we saw it after the Fed, if lower rates would be so bullish, and I say this the same as I did say for emerging markets, then why didn't stocks just start to go nuts on the top side? They didn't either, right? Mm-hmm. So the market seems to sense that maybe it's different, right? Yeah. Stocks off aggressively after the weak German PMI because it was a shock. It was like, oh, maybe low rates aren't too bullish for stocks. But what I don't understand is the stories last a day or two, then it's gone. We have ECB, dovish ECB, we sell off in the euro for a day, then it's forgotten. We have Fed, forgotten after a day or two. Everything is just immediately forgotten, which is absolutely horrible for when you try to trade macro. So that's why I'm started to play, my position is always macro. I just manage it differently. Part of the risk, I manage micro because like you just rightly said earlier, if the market gives you 70, 80 pips, well, maybe we shouldn't wait for 300 pips, right? That's just what it is. So we have to adapt. Hopefully it changes, but for now it just doesn't. Why? I don't know.
Yeah, no, absolutely spot on, mate. I guess the final thing is Japanese carry still long try yen. Now, that's interesting. There's always going to be an element of Japanese retail in various. I mean, Japanese retail. Some of them are really big. They've got deep pockets, and they've got certainly got an appetite. So there's always going to be those kind of people around. But you know, let me say, they've got a certain appetite, and it's something that I don't have personally. So they're always going to be around, but it doesn't mean that everyone can do it. So just be careful of that. I just want to sort of make that point. I don't know if you have anything to say on that, Pete.
Oh, to be honest, I mean, what we do know is that if dollar Turkey is not stabilizing in the next sort of few days, if we have more nasty moves on the top side, sooner or later we're gonna see something what we've seen early in the year, you know, where we had a flash crash. So the last one wasn't triggered by Turkey. This one could be. You know, reality is dollar Turkey usually doesn't trade overnight. So that means if we do hit stop losses, if we do hit margin calls, it could get rather nasty. But I don't know, you know, like you said, you know, you have 24% yield. If the currency goes down 10%, you still make 14. The problem is Turkey could go 30%. That's the problem, right? And I'm not sure where the pain threshold is going to be. But it's something that if you know, let's say if he said, oh, let's wait for the election and so on and so forth, so things should stabilize within the next few days. If it doesn't, those positions are for sure at risk.
Yeah. Well, I think we're going to wrap it now, mate. That's just been an absolute stonking, despite our technical difficulties. It's been a really good show. If you've got any comments for us or questions, we're both on LinkedIn. We're both big bloggers. Just write in or direct message myself or Beat. We always reply to emails and messages. The only other thing I'll say is Beat does an amazing commentary, and you know, I'm not going to ruin it by trying to describe how good it is. I'm going to let you do all that because you're much better and you're far more eloquent than me. Beat, tell us about it.
I'm probably just underselling it. No, just kidding. No, no. What I do is for those who are followers in LinkedIn, they probably see part of the small, let's say 3% of what I do, which is, you know, I cover all the G10s, I cover all the emerging markets, 4-hourly charts, daily charts, the themes, the positions I've got, what I think about stuff. And then I write a piece called My 2 Cents, where I just really think out loud what I think about the market. You know, sometimes I'm early on to a story, and it just kind of probably, you know, it's information for those who are more experienced. I think it's definitely very tutorial for those who are learning. So whoever is interested, get in touch with me or with Patrick, and we can have a chat about it. Back over to you, my friend.
Thank you very much. It was a great show. That was a pleasure to have you on. And you know,
sorry for the technical hiccups. I'm not sure what happened today.
No, not at all. It's you know, it could be my end. Who knows? But you know, we got there and we got the content in. And, you know, just like I say, just feel free to message either Beat or myself, and just be careful. Just watch that risk. And one thing I will say is this low vol, it's not going to last forever. Okay, and you know, whether that's, you know, QT, whether that's interest rates, whether it's the bond market, whatever it is, I know that you know, fading any kind of strength or weakness in both dollar and risk has been working for me personally, and certainly Beat. That will not last forever. Okay, so we may get, and usually after this kind of like a spring coil, it will get released, and then you'll see some big moves. So just until then, just, you know, keep an eye on everything, and you know, wait for the next indicator. Thank you very much. That's me, Patrick Reed from the Adamus Principle. watch that risk, be careful, and we'll see you next week.
Good night, everyone.
Night.